What's up, everyone? It's another episode of Stockommon Cents. Um, I'm trying to break the habit of doing every 2 weeks. I'm trying to make sure I get you guys something every week. And so I want to go ahead and do the best that I can. So I'll make sure I bring these to y'all every week, so it's not as long and so you guys don't have that much of a wait. So let's go ahead and get started. Looking at the S&P 500, currently up 2.55% from the week before. If you remember, I'm gonna go ahead and set my trend. So if you remember, one of the things that I wanted to see, right here, a couple things that I wanted to see was lower highs and lower lows, right? So if we were to look at this trend over here, we're still a little bit within range. What I want to see is a break of the trend, right? So if we were to draw lines over here, or hang on, let me see if I can do this. Yeah, so if I were to draw lines from here to here, you can see one trend, right? I'll make this yellow. So what we want to see, we want to see higher highs and lower lows, right? If you look right here, all this has been a staircase, right? We've seen a lower high and a lower high, and this is what we want to see coming up, right? And then we're seeing lower lows, lower low, lower low, lower low. Now we have had analysts and people think that the bottom is in. For myself, I'm one of those people. I don't see how we can continue to keep having bad news after bad news after bad news without having a higher reversal. And so I'm along the lines of, okay, I think we hit our low here, right? We all know we're headed towards a global recession. There are already areas in Europe that have been hit hard and are still trying to combat the things that are going on. But with some of these prices for some of these major companies that we have on this end, I think the hysteria has gone too far, me personally. We do have some people who think that we may get to a low of 3,200, around 3,300, which would be in this area over here. I am not along those people in that camp. I'm not. So I want to see that this staircase continues to go in this trend like this. This is what I want to see. I want to see us keep rejecting the lows and continue to push upward. I'll go ahead and put this yellow. So one of the levels that I'm really watching to kind of see how we do is at the 4,000 level. If you look and see, once we got to around this level, we rejected pretty hard, but we still had a good week. So I want to see us break above this level and continue our upward rise. So 4,000 is a big level that I see, and I want to see how we continue to do. Now, whenever the stocks go down or whenever our equities go down, our small caps start first, followed by our large caps. But whenever things start looking better, our large caps go first and our smaller caps follow, right? So this is a great transition to the Russell. So if you look at the Russell 3000, we ended this week at 1806. It was 3.56% higher, right? These circles that I have over here were consolidated levels. And if you look, we fought between a range and then broke down. This should be circled as well. Fought between a range and then broke down. So now we're at another range. And I want to see how we do holding up, right? If you look at this week, we broke through a level, and I want to see us stay above this level to continue our growth, right? This is the same thing that that I talked about with the S&P 500. If you were to look, here's the range. Right around here. Make it yellow. And I want to see this break that trend. So this can continue the staircase upwards and break that trend. That should get us to where, you know, we're out of the woods, we're looking upwards. And a couple things that have been giving me some life as well is that our second quarter earnings, I believe I read a number that it's between 73 and 77% beats of estimates. So that's extremely, extremely good. Extremely good. So we want to continue watching to see what occurs. And we want to see with this week starting in the next few minutes, actually, we want to continue to see that these things are moving upwards. Now, on the things that happen for the week, if we were to look at crude oil, it's currently up right now. But when I had this created, we ended up dropping down to $95 per barrel. $95 per barrel. So if you look, this was around the time where we opened right around here for the year. So we opened at $75 per barrel. We had analysts who were screaming that we're going to get to $200 per barrel. I personally don't think we're going to get there unless Putin just does some off the wall things, right? Unless he does some off the wall things. So we want to continue to watch to see how oil is doing. You should have seen some reprieve within the gas tanks, you know, filling up. I believe here in Texas, we're currently at 359 or like 351, which is definitely a good sign that we're getting a lot of these things getting under control. So we want to continue to watch how these markets are moving, especially for our pocketbooks. Now, another thing that happened in the past 2 weeks is that we had a higher CPI number. We had an extremely high CPI number. I believe we ended up coming out to 9.1. Let me just go ahead and pull up an article. Let me see. Or was it June? I think it's June. I should have had this ready for you guys. I'm trying to find the year over year number. So that number was 9.1, which is higher than what we had last month. And the last month was around 8.3 or 8.5. We still have people calling for the peak. I know I called for it. I didn't expect this to look the way that it looked. But remember, the CPI numbers include gas, it includes food, it includes transportation. So that number does not reflect the slowdown in gas prices, right? So of course that number is going to be elevated. We want to make sure that this number is staying down for the health of the economy. And with the Fed having with their Fed releasing their plans on what they plan to do with the Fed funds rate, this is going to be a crazy watch. It's going to be a crazy watch for us. Looking at this chart, you can kind of see where we were at with month over month numbers being at 1.0 with a forecast of 1.7. If you look, yes, there's a gradual incline, but hopefully this is the top and we can continue to see a downward trend. We want to see a downward trend back into the normal numbers of around 3 to 4%, around 3 to 4%. Now, even with CPI, the next thing that comes out is the home prices. And home prices have hit a all-time high of a median price to $416,000. Now, this is pricing out a lot of individuals out of the market for them to be able to purchase a home. And you can see, as we talk about this month after month after month, this is why you're starting to see the Federal Reserve trying to lower numbers. With home prices and homes being the biggest assets to most American families, this is one of the biggest things that we want to see come down, or at least slow when it comes to inflation. So we want to make sure that this is getting to a level that's at least reasonable. Each year we do expect our home prices to rise, right? But with how dramatic this is rising, this has been a thorn in our side. This has been a thorn in our side. So something to watch. Another thing that's on our horizon is we have another COVID wave. Do I think this is going to cause a shutdown? Hopefully not. But what this is going on is we're continuing to have mutations in the having mutations within COVID-19. And this one is a newer, more contagious virus. I believe this one is more dangerous than it is compared to what's that one that we had? The Delta, I believe the Delta virus. And so we want to make sure that we're keeping ourselves clean, washing our hands. If you feel sick, stay home. But why this is big is because I know that the US and other places around the globe aren't shutting down. But the place we have to watch out for is China. With China being one of the biggest places of, the US exports, US imports and, imports for a lot of countries around the world, you can see how if they have another shutdown, how much that will affect our globe, and it will bring consequences again to our inflation, right? With inflation being as high as it is, a lot of it is due to port congestion. A lot of it is due to higher wages. And if everything is shut down, it takes more time for our companies to receive the shipments to be able to sell to the people here. So it's just something to keep up with. Going on to earnings. Past 2 weeks, I told you guys that these upcoming weeks are going to be major, right? We have our big banks who performed well. For example, we have Bank of America, who slightly missed earnings. We had Charles Schwab, who beat IBM, ended up beating, but they ended up having a big decline in their stock price simply due to the fact that they issued a lower guidance. So if you were to look, this was a ridiculous drop. Absolutely ridiculous. If we want to see exactly what that percentage is, they opened the week here and got to as low as 9.4% down, which is crazy. Very big decline. And if you remember, I told you guys, because of how inflated some of our stocks were, guidance and estimates, or not estimates, but earnings call can make or break a company. Very much make or break a company. We do have Goldman Sachs who ended up beating. I believe they ended up having a good week. Johnson & Johnson was okay. Another beat was Netflix. We expected Netflix to have a lower than expected, or have a higher decline within their subscribers. So I think they're expected to lose like 2 million, and they only ended up losing like 900,000. If you look, they had a nice big pop within their stock. They're still far away from the $700 that, the stock price that it was. But what they will be looking to do, just off of technical analysis, they will be looking to fill this gap right here. I've heard some people say that they still believe in Netflix and that their beat, or the beating that they're taking, isn't just. So if they're expected to rise, we want to see them break through this level and at least get back to 350. So another thing to watch. What else do we have? We have Lockheed Martin, which crushed their earnings. So if we look, they're expected to bring in $1.4 per share. They actually brought in $6.32. That is crazy. So if you were to look at their chart, they did have a down week, but ended up bouncing back. So this, when I see a long line like this will be a bullish trend. This will be a very bullish trend. So this is something that I want to watch and see if it continues towards the upside. I know they had a bad week, but in the next few weeks, you should see upward momentum. Who else did we have? We also had Tesla, which had a very big beat, very, very big beat. They still, I think the only bad news that they had was they ended up selling their Bitcoin at a loss. I think it was like $190 million, $170 million that they lost in Bitcoin. But they ended up crushing revenue, ended up crushing margins, and that's even with a quote unquote bad quarter. So if you look, had a very good pop in the market, very, very good pop in the market. So we want to see how this does moving forward. The next stocks coming up for this week is going to be a killer, killer, killer week. We have Google showing today. Then we have Microsoft, Visa. Next day, we have Facebook, which is now known as Meta. Then we have Apple, Amazon, MasterCard. Then we have Exxon, Procter Gamble, Chevron. It's going to be ridiculous all this week. So with the S&P 500 at currently where it's at, this is going to have very major implications, as well as, let's go ahead and look at our calendar, because this is going to be a very intense week. Oh, that's June. So we have CB consumer confidence. That's Tuesday. Wednesday, we have the Federal Reserve speaking and the funds rate. Then Thursday, I believe, is CPI or GDP. This is gonna, if this number is negative, then that means we're officially in a recession. And then Friday, we have our core PCE index, and this is the inflation that the Federal Reserve uses to say whether or not things are getting better or worse. So jam-packed week for us, extremely, extremely jam-packed week. Now, instead of doing a stock of the week, what I wanted to do is show you guys how I look for a good stock, or a stock to invest in. So here's what we'll do. I'm gonna go ahead and pull up Market Watch. Then I'm gonna pull up the S&P 500. If I'm going to invest in a stock, I want to invest in a stock that is in a major index because it has lots of institutional backing. And I'm gonna do something completely random. So let's look at NEE, which is NextEra Energy. First thing I'm gonna do is I'm gonna pull up my chart. Oh, I don't want to show that. Pull up my chart, go to NEE, and I want to see the past 10 years. I typically do 5 years, but in this example, I'm gonna do 10 years. And what I want to see is an upward rise. Is there an upward rise in this stock? Yes. Going from beginning, you can see all it is a gradual incline all the way up. That's good news, and this is something that I want to see. Next thing I want to do is I want to look at I want to look at who is running the company. So I'll go to NEE. I want to go to their fundamentals. And I want to see who's running the company. So we have James L. Robo. And I want to see what he's done in the past. You can see he's been on the board since 2013. Number one, just off the bat, he's been involved with several companies. Let's see if there's anyone that we may know. Doesn't show. I want to see good things from the individual, because if he's leading the company and he's had great success in other places, then more than likely the same should follow, right? I want to look each individual up as well. I want to know where they've been and what they've done. From there, the first thing I look at is their income statement. I go by annual, and I want to see if this company is consistently making money. This would be a red flag. Watching this company go from 79 billion down to 57 billion. To me, that's a red flag. Then I want to see, are they reducing the operating expense? Because if they are, then how are their margins looking? So if you look, they go from 67 all the way down to 52. So they are maintaining their costs, but the margin has reduced. So that to me would be a red flag as well. What is their OI? OI goes from 11, and OI is basically how much the company makes without some of the expenses. So revenue minus, or business revenue minus business expense is how we get our operating income. So then we have 11.4 billion, 11.3 billion, and then a drastic drop, 7.2 billion, 2.5 billion, 4.8 billion, right? So I see those things. Next thing I want to look at is their balance sheet. What is their balance sheet showing? Do they have a lot of cash on hand? Yes. They're currently sitting at 7.2, or basically $7.3 billion in cash. Does this outweigh their debt that they own? And if you look, long-term debt, 39.8, 35, 44.8. This is something I do not like to see. I want to see that their cash and their short-term investments can cover all of their debt. The minute I see that, that's a red flag to me. Big red flag to me. Then from there, I want to look at their cash flow. How are they handling their cash from their operations? And if you look, great sign, all positive across the board when you look from cash operations. That means they're making cash from their business to be able to support their business, right? So I see all of those things. From there, I then want to look at their valuation, which is basically their PE earnings. If you look, oh no, I was looking at the wrong company. Oh geez, I apologize. Let's do this real quick and I'll show you guys again. James Robo, perfect. I go to, okay, so the fundamentals were right. What about the revenue? So I come here and I look, revenue had a down year, but overall cash is going up. Operating expenses, yes, is going up, but the OI is also going up. So the revenue or the OI is increasing. So that's great news. That's something I want to see. Then from there, I want to look at their balance sheet. And I don't know why it changes to IBM. So I want to look at their cash. Cash short-term rental has increased each quarter. I want to change it to year. And it's fluctuating. I don't want to see that fluctuate. I want to see them have as much cash on hand. If they do have cash like that that's fluctuating, then I want to see that they are increasing their CapEx at least. So if I were to go and look at the long-term debt, very big long-term debt. To me, that's very alarming. And that's something that we'll have to get further research on. So that's not something I want to see. Cash flow, we go to the cash flow, again, change to IBM for whatever dumb reason. We're gonna change it back. Cash flow. Cash flow is high. They are producing cash from the operating business, so that is good news. Very much good news. After seeing all of that, I want to see what are analysts thinking. A lot of analysts have them. We have 9 buy, 3 hold, 0 sell. They're currently at that bear case scenario. So overall, would I invest in this company? The biggest thing that gives me pause, again, is their cash or is their debt. I'm not a believer in big debt. So for me, it would be a no. Just being 100% honest. I do like their. It keeps going to IBM. This is crazy. I don't like their price per earnings, which is extremely high, especially compared to industry. So this supports my case of saying no. I like mine to be no higher than 25. I like my PE just for me. I like my PE not being no higher than 25. But this being 61, this is just letting me know that this is going to slide down eventually. When that does happen, then maybe I can go ahead and revisit. But at that price, the price for earnings, this lets me know this stock is extremely overpriced and I should wait to the levels that I want to get to. So if I were to invest, a couple levels I would look at would be here and possibly here. And if it's a good company, then we can revisit whenever it gets to those levels. But as of right now, this is extremely too high, and I would want to wait. So that was another episode. I wanted to go ahead and show you guys that. So that way you guys can start doing your own research as well, and you can follow along and see the logic that I have whenever it comes to finding good companies. So thank you for watching. I know I went a little bit fast, kind of sped through it. Got a couple things going on, a couple things I will be announcing soon. But I just wanted to get this out so you guys have something to chew on before the market starts. So appreciate y'all, and I will see you guys next week.